Alrighty. So, as I'm looking at how I used to trade in the past and how I'm trading options and everything that I've learned, I'm putting together, a trading strategy that's really gonna, I believe, work for myself. And and I say that because, even now, I had an Amazon short and I got bored. And even though I'd shorted it, I think I shorted like 310 or something, and then it went all the way up to 343, and then came all the way back down, and I had a short sell signal right here, and then I covered, and then the next day, which is today, it drops, and it's like, okay, I just gave up $200 because I'm impatient, and I had 200 or 100 and something days left on the trade, and so I'm like, I have to overcome that mentally. But going back just to setups and what is a great setup. Um, right here you can see I have an alert, and that's kind of a stop loss on this trade for the spiders because I just had a sell signal today, which is why I got into this trade. But as we can go through different times and see when I was supposed to short this and hold on to it. So given that random information of, beating myself up for not allowing my trade to pull through, and having little stop losses in different time frames. So that's a daily, that's a 15-minute. We're going to go over to this Apple chart and maximize sell and take a look at this. So this is hourly, going to be an hourly trade. So as you can see, Apple hit a all-time high of 119.75, and when we hit all-time highs, eventually things are going to sell off. And I'll just go out here, and as you can see, look at that. Look at it on the daily. Boom. And now we're going to come back down, and we're in this downtrend channel right now. So we move back to the hourly time frame, and that channel looks a lot bigger. And so I have some volume, I have Bollinger Bands, which is in the TTM squeeze, and then I have oscillators right here, which kind of tell me the momentum of where it can turn around and whatnot. So again, that crossover, we had a sell here at 116.24, low of 106. So you could have held it for $10. Down move. But what we're really looking for is the next move back up, and we can and really we had this low of 106.26. We're going to keep going down, and we're going to look for this next crossover that's going to come back up here, probably about 104. So this is going to go pink, and then we're going to want to grab this move upwards. And you go, okay, well, why? Well, let me see here. We have these waves up. We have one wave, that's a leg. We have two. Then we have three. And then we've had this movement down, right? And you go, well, if you know your Elliott waves, you go, okay, well, 1, 2, 3, 4. If that's number 4, then that negates this right here, 1, 2, 3. Yes, it does. So that was just a 1, 2, 3 up. But that from this low, 94.05 or whatever, that is one leg. So this is now wave 1. This will be wave 2. And then we'll have a wave 3 going up from here. So C is our potential point for another leg up. So this trade type is going to be a long trade, term length, intermediate. Target is 112 to 135. Now, why is it 112 to 135? Because since we are in a channel down, we buy, right? Our channel could go up, hit 112, or our trade can go up, hit 112, and just bounce off and just fall. It could just bounce off this red line. It could go up to 112 and have a little ping pong up, down, and then down again. Or if I ran a fib retracement, I'm pretty sure from these targets, since we do have a bunch of support there, right, we're going to run this down to our low. And our 1272 is 123. Our 1618 is 128. So if I remove that drawing and go from our 104, like so, we're going to move our target to 130. So actually with Ike, I don't really know how he got that target, to be honest. But I know that he is better than me, and he knows. He can do that, the wave count, way better. And he probably has a different time frame to show that target. Support is 103, 105. So if we break 103 to 105, then that's basically where we want to put on this trade. So 103, 105 in here. Invalidation price is 90. So if it goes below 90, then that would be like a real stop loss, get out of Dodge type thing. Really for me, if I went long at 103 and it dropped to 100, I would still be out. But anyways, that's what we're going to be looking at for this long trade. That one thing, actually I saw that on the hourly. If I go to 4 hour, I think I can see it. That is actually what I'm looking. I just saw right there. This little gap. That could be everything. So we're going to label it. What am I going to label it? I'm going to label it gap fill. Gap fill line. We're going to edit properties, and we're going to go show name, price on the right. There we go. And that's going to show us the price at what that gap is. Okay. So it'd have to be below 100 for me to actually sell out of this, because really that could just go down, hit that gap, and then we would see a takeoff. So so this is just one setup that we're seeing for longs. I don't think, unless the Fed came out and said, we're going to stop everything, then this market would probably continue up. I've just the bear side of me. I'm happy right now because the market's going down, but it's setting up for all these long opportunities, and that's really what we should be looking for in a market sell-off, is long opportunities. So that is Apple.